Good morning, my predicted trades family. Hope everybody is doing well. It is Thursday, August 17th, and we're at a very interesting point in the market. One thing I was going to cover real quick is just looking at the overnight session with our Beast tool on ES. As you can see, every day, every night, our Beast tool is giving you key levels to risk against. You can see that we dropped to begin the overnight session down to our open range buy zone. A 3-minute squeeze pops up, which is a good sign that a reversal's coming. We slip that open range buy zone just a little, but then we take off, we hold it, we rally over the open, we come back and hit that open range buy zone one last time at 414, and then we take off to the sell zone up at 428-ish, right? So you make about 14 points captured on ES. That's, what is that, about $700, something like that? So either way, I just wanted to point out that this Beast tool that we distribute every day is very helpful in futures during the overnight session, during the cash session. It's a great guide. We can zoom out and look at yesterday's session to see that we open near our open range buy zone right at the bottom of some squeezes. We get that quick reaction up during open, but we just get as high as the open range sell zone, and right near that squeeze top, that's where I called out shorts yesterday after the triple top, 1, 2, 3 times tapping 44.65. Called out the shorts, we rode those down for the rest of the day, locking up profit. There was that little bounce back to VWAP where we called out shorts again and rode those off into the sunset. And you can see we went from that open range sell zone down to our destination buy zone. So every day when we start to break our opening range down or up, we always have a good idea of where we're going with those destination buy zones, and above we have a destination sell zone. One thing worth noting, on Tuesday, Monday and into Tuesday, we made our way back up to the daily 21. That is this white line up here. And we rejected the daily 21. We fell through the daily 50, which is the purple line here. And now we are moving away from those daily moving averages. Let me go ahead and drop us into our normal prep time frame. Let's give this just a second for it to load. So as you can see, we have been rejecting the daily 21 repeatedly, and now we get the breakdown away from the daily 21. We did have a daily squeeze that has fired to the downside as of yesterday, but whenever we have a squeeze firing, we always want to be ready for a potential reversal. That's right, market makers have gotten wise to the whole squeeze and the way that folks track it in retail. So there's lots of times that they let a squeeze fire and then reverse it right back. Why am I talking about reversals when we're just breaking down away from the mean? Let's take a quick look at a 4-hour chart and we'll be able to see why. And let me load my other drawing set on here. There we go. So what I wanted to point out at the very least is we had our run up. Let's just grab May into here. So in May we had that run up into June, and in June we had a run up even further into July that got us back up near this 4,600. If we look at just July, July set lows right around these two zones that I've marked, right? And yesterday, we arrived back at those zones, the top zone, and fell to the bottom zone. We also have a trend line. If we look back, these trend lines are extending from when this rally kind of started, and I know it's kind of a mess when we zoom out, but as we zoom back in, we are at a series of trend lines that can also give us support. So we've got our July lows, right? In July, they ran it up all the way to the end of July, and since then we have been fading back. So now we've made it to those July lows, and it could be a good spot for us to hold, for the market to hold, and for buyers to step back in. If we start to lose these July lows, I'm going to be maybe shifting a little bit more bearish, right? Obviously, we've been having a down spell for the past couple of weeks in August, but this is still just a healthy pullback to daily moving averages, right? If we can't hold these zones, reject moving averages, and lose these zones, then I'll be getting a little bit more bearish and thinking, maybe they want to go test some other previous lows. Let's take a look from about here on, about the end of May. So if we start to lose this zone right near 4,400, we have our lows from this pullback in June around 43.50-ish. And then should that give out, we have this strange little gap in futures when the contract shifted over. So if we give out that 4,400, we're going to be targeting down to that 43.50 where the start of that gap is, and then through that gap gets us down near 4,300. So if we lose 4,400, we could see a quick flash down to 4,300. But then we have a lot of price action that we'd be running into, so we'd definitely find some support there. So let's keep an eye out on this week. Are we going to hold this zone, which basically spans, come on, there we go, 44.11 up to 44.20. So I'll just call it 44.10 to 44.20. See if we can hold this zone, rally back up to 44.50. If we can get through, turn it to support, then it's back up to our daily moving averages for a test. Daily 21 is near 4,500, has slowly come back down from being up near 45.40. So let's see if we can find support at these zones. We are also down near that second Keltner. And let's just take a look from the top. To the bottom, we're down about 5% off the highs. So just a healthy pullback, right? 5%, 10%, that can still be healthy. Let's see if we take it down to 4,300. We're at about 7.25%. So not crazy, the pullback that we've had so far. Overall for today, and I'll drop back down to our 30-minute. Overall for today, we don't really have, I guess we do have a 30-minute squeeze that is somewhat forming. We have our zone of support, our overnight lows. So basically looking for those things to hold on any pullbacks at open, and then to see if we can carry up to that 44.50. We start to lose 44.10, the overnight low, we're going down to 4400. And yeah, my next big key levels are near 43.56, 43.47. The only other saving grace right near 4400 is that second Keltner. And yes, we can react to daily Keltners and it cause reversals. So let's see if we can hold up. We start to lose 4,400. It could be a quick move down here. Just like yesterday, it was a bit of a quick move once we finally gave out, straight down to that zone, right? Let's move on. NQ. NQ has fired its daily squeeze down. We do have a 2-day squeeze sitting right near that 14,800. We slipped below 15,000 yesterday. Now we're coming up to try to test it. Overall, we have our overnight lows near 14,900. That's where the bottom of the 30-minute squeeze sits. So if we start to lose 13,900 in our overnight low, we are going to go down to test that 2-day squeeze bottom at 14,800. That second Keltner at 14,840. But if we can hold up above 900, 950, where VWAP sits, we could see a pushback over 15,000. We can hold that on any pullbacks. Then the play is back up to 15,150, basically where we rejected yesterday, and where that daily 8 has now caught up to. Moving on to the ready. Also fired its daily squeeze down today, but we can see a nice reaction back. Overall, we have our lows near 1871. We wrap around 1880, looking for those things to hold. 1900 is a very big key level on the ready, so not surprised that since this rally that we had, May, June, July, is seeing a decent pullback, and not surprised to see the ready pull back to 1900 and even slip a hair below it. The question is, how long do we live below 1900? It will start to spell more downside if we can't get back over. So let's see if today we can hold 1880, make that play back up to 1900, and if we can get through that and yesterday's highs near 1910, then it's back to the daily 8, 1950, the daily 50 at 1925, daily 21, 1936. If we roll over and start to lose that 1870, the daily 200 sits at 1850. The third Keltner down sits at 1842. So that is your next target zone should we give out the overnight lows on ready. YM. A little bit of a different story over on YM. The last few weeks, if you look at this, we've been stuck in a liquidity pocket. The daily 15, this orange line, the daily 21, this white line. And we just basically would reach past, come back, reach past, come back, back and forth, back and forth. We have finally broken that consolidation down, and look where we have arrived, at the daily 50. As we already saw, ESNQ and Ruddy have already gotten to or below their daily 50, and now we've pulled back enough that YM is tapping the daily 50. So just when everything looks like we're about to dive and all the bears are loading up, YM has something like a very big or very fat daily squeeze bottom right at the daily 50. Great spot to hold. So again, let's see if our overnight lows can hold this daily 50 at 34,791. 34,800, just a big key psych level. That's also where our first Keltner down sits. So on any, let me zoom in here a little bit, sorry. So on any dips, I want to try to hold that 34,780, 34,800 near this daily 50. Make pushes back over 34,900 up to 35,000, and if we can get through that, then we're aiming for this little liquidity zone with the daily 8, daily 21 at 34,115, 34,160. So let's see if we can hold daily squeeze bottom. Let's see if we can engulf through to yesterday's highs and to get back to that zone. A close up here could spell even more of a bounce tomorrow if they are just going to reverse us back up. Moving on. Oh, and before I actually dig into the individual names, I always seem to forget until this point. Let's check in on our economic calendar. So far this week, we had the FOMC meeting minutes yesterday. Definitely got the market woken up and moving. What did it? I think it gave a pop first and then the big drop. So today we have jobless claims, we have some manufacturing data, some economic indicators at 10 a.m. But then after that we have no econ data for the rest of the day, and we have none for tomorrow, which is a little surprising. None for Monday. Looking at next week, we have PMI data, new home sales, jobless claims, University of Michigan sentiment. So kind of a light week next week. We are in an OPEX week right now. So we got to be ready for the fact that they are rolling into the next month's contracts. Next month will be a quad witch. So the question is, are they going to load into next month's contracts to the call side and run it back up before the quad witch? Or are they going to load more for the downside? So let's dig into Apple. Apple had the earnings with the negative reaction. Also, I think it was just some negative news against Apple with, I'm trying to recall from memory what it was. Something like the demand for their products isn't what it used to be. Either way, caused the reaction that brought us right back down to these key levels. Oh. Darn it, I can't see this level because of that low candle. That level is... Hold on one second, let me get rid of that low candle. There we go. Made it down near this 175. We're just going to call it 175. That's where the third Keltner to the downside sits. That's where an old fib sits. And we've basically just kind of been stuck between two old fibs, and one at 179.6, one at that 175. So let's see today if we're going to tap 175. Let's see if that brings the buyers in, and Apple can reverse back up to yesterday's highs near 178. We start to lose 175. The next stop down is this 172 and 171.31. Very big key levels. But if we can hold up 175, looking to the reversal back to 178, 179.6, and 180. Moving on, AMD. AMD made it down to the bottom of the daily squeeze. On Monday, chips were pretty darn strong. AMD got down near 105-ish and reversed back up to 112 to the daily moving averages. And then what do we get? Rejection at the daily moving averages. Whenever we see something like that, we've gone away from the moving averages. We've held something like a squeeze bottom. We're back at those moving averages. If we think about it, a daily squeeze... The daily 21 is going to be the middle of that daily squeeze usually. So we made it back to the middle, reject, reject, reject. So what do you get? A rollover right back down to test the base. So let's see on AMD if this base can continue to hold this daily and 2-day squeeze bottom. If we can hold here and start to reverse back over 108, 109, then we're playing up to 110 and up to 112. Where the moving averages still sit. Let's see if we can get a little bit of a double bottom here on chips for this potential run up after OPEX. If we start to give out, we'll just say 106.5. Then we're likely coming back to retest 105, and this candle's low. Let me get on this candle. The low is 105.4. Okay. So if we start to lose that 106.5, we could be coming down to 105.5. And should that give out, let's see, next target down near 103 where the second Keltner sits to the downside. Amazon. Big old reaction to earnings and has done a good job holding up. Yesterday made it back to the daily 21. So there could be a thesis to try to hold near this daily 21 and reverse back up after the good reaction on earnings. If we can hold, and basically just call it 134. And the daily 21 is basically like 135. So as long as we can hold 134, 135, looking for Amazon to get back through 136, 137, where the daily 8 sits, 138.5 where the first Keltner sits, and then up to this daily squeeze top and recent highs near 142. If we start to lose 134, then we want to play down to 130.7 where the daily 50 sits, along with this first Keltner to the downside. And then should that give out, we want to play to 127.5 where the second Keltner to the downside sits, and basically our little lows right before the earnings run up. Filling the earnings gap gets us back near 128.75-ish. So let's see if Amazon can hold. Losing this daily 21 sends us to the 50. Losing the 50 sends us to pre-earnings lows. Moving on to Google. Man, what a mixed bag Google has been. But has made it back to the daily 21 near 128. So on any dips, looking for 128 and that daily 21 to hold. We also have our 4-hour squeeze stacked there for support. As long as we can hold there, looking to get back through the top of this 30-minute squeeze near 129.5 to play up to 130. We also have the daily 8 near 129.5, the daily 15 near 130. If we can clear those, then playing back up to 132 at the top of the 4-hour squeeze and near recent highs. We start to give out 128. We want to play down to 127, a key level, and 125, where the first Keltner to the downside sits. That would be if we fire this 4-hour squeeze. Like we have to lose the 128, we'll fire the 4-hour squeeze down. That momentum could get us back down to 125. Well, moving on. Meta has made it back near the daily 50, right? That's the theme right now for most of our names. We've made it back to the daily 50, can we hold, right? Some other names are a little stronger and haven't made it back to the daily 50 yet, but on Meta we have. Overall, let's see if 292 can hold. If not, we're coming down to 290, 287.5, where the daily squeeze bottom and the second Keltner to the downside sits. But if we can hold up, 292, looking to get back over 295.5 where the daily 50 sits, and then try to make that play back up to 300 where we rejected yesterday. Moving on to Microsoft. Just been riding this daily squeeze bottom, but after some big moves up on Microsoft, we'd have to zoom out to a higher time frame. I'm not going to do it right now, but excuse me. Overall, let's see if we can hold. Looks like our recent lows have all kind of been around 319. So let's see if we can continue to hold 319, 320, and reverse back up to 324-ish, where the daily 8 was yesterday at the top of this squeeze near 325. Daily 21 still sitting way up near 330. If we were to lose that 319, 320, we'd want to target down to 316, where the second Keltner sits to the downside in this daily squeeze bottom. Netflix, old Flixie. Could not hold that 419, 420 yesterday. Once it gave out, fought back and rejected to roll over for more. Looks like we're going to be opening down between 415, 410. And we have, let's see, daily squeeze and 2-day squeeze bottom sitting between 405 all the way down to 397.5-ish, right? So, overall, if we can't hold 410, and our pre-market low kind of near there, if we can't hold 410 and roll over, we want to play down to 405, right near that second Keltner to the downside. Should 405 give out, we want to play down to 400. And this 395, 396, that's where the third Keltner sits to the downside. But if we can hold up 410, we want to play back through 415, back up to that 419, 420. And if we can clear that, the daily 8's at 425, the daily 21 near 430, daily 50 near 432. NVIDIA. Look at this. Taps the 2-day squeeze bottom and the second Keltner to the downside and just rockets right back up to all of our daily moving averages to hold. NVIDIA does report earnings next week, I believe it is. Yeah, next week. So we'll see how that goes. They're kind of the last to report for chips. They'll be reporting here near the end of August. And near the end of September, Micron reports their earnings. So we're starting earnings season all the way over again. I track Micron to let me know when earnings season starts because they're always the first to report for chips, for tech. So we get a little bit of an idea of how investors are reacting to earnings reports. Let's say it's a good report, but they sell it, right? Or a bad report, but they buy it. We kind of get our first glimpses of how are we going to react during earnings season with Micron. And of course, NVIDIA reports last out of chips. So it kind of, when did Micron report? At the end of June. So it's been like 2 months of the earnings season, right? That we've dealt with the beginning of chips and coming up on the end of chips. Overall, let's see if NVIDIA can hold the daily 50 at 432.5 at the bottom of this 4-hour squeeze. Basically, if we can hold 430, 432, looking for a reversal back over 440, 445, 450. If we start to lose 432, 430, we want to play back to 425. 422.5, where that first Keltner to the downside sits. 415, it looks like a daily squeeze is starting to pop up around there. And should 415 give out, that it's, excuse me, right back down to where we started this rally the last couple of days at 405. QQQ. Making it down near 362. We have 360 big psych level sitting below. So if we start to lose 362, 361.5, the overnight low, then obvious target is playing down to 360 and that second Keltner to the downside. Below 360, we've got the third Keltner to the downside at 355. We also have the teensiest bit of a 2-day squeeze near 358. But if we can hold 361.5, 362 at open today and get back over these pre-market highs near 363.5-ish, then we want to play back up to 365, 366, kind of the last spots we rejected yesterday. If we can get through that, up to 368, where the daily 8 sits. Moving on, SPY. Made it near that daily 50, gave some bounces back to the 21, as we've already discussed, and now we are below and rejecting the daily 50. As I showed on ES, we've arrived at a zone that could bounce us from July lows. SPY is going to be the same. So let's see if we can hold the pre-market around 439 and the psych level of 440. If we can hold here and get back over 441, then it's a play back up to 442, 443, kind of the last spot we rejected yesterday. And that daily 50 at 444-ish, right? And yeah, if we lose the 439, play to 438, and then down to 436, 435. Moving on, Tesla. Slowly breaking down like everything, but it has arrived near the third Keltner and right near a key level at this 223. So let's see if we can hold 223 and the third Keltner at 222.5. It could be a spot for them to start loading to get back to daily moving averages above. If we start to lose that 222.5, we want to play down to 220 and this 216.3, next key level down. If we can hold here, looking to play back up. Pre-market highs around 229, 230, where we last rejected yesterday. If we can get above 230, 230.5 and hold, looking to play up to 233, and then up to 240 where that daily 8 sits. And finally moving on to VIX. Even in all this selling that we've had, we've only seen VIX get up to 18 this once, right? Held the daily 50, daily 21, and took right off up to 17. Came back for a second to 16 and ripped up to 18. But then we have had continued selling and VIX has stayed very mute. It gets up near 16.5, it reverses back down. It gets down near 14.5, it reverses back up. So here we are again at 16.5. Pre-market, we're pulling back to it. So if we're going to see more selling today to pile on top of yesterday's selling, we'll likely see VIX hold around this 16.5 and rally back up to 17, 17.5, and 18. That's if we're going to see more selling today. But if we're going to try to hold this zone on ES and recover yesterday's selling, then we're likely going to see VIX lose 16.5, come back down to 16, back down to yesterday's lows. And if we can fully recover the sell-off from yesterday, maybe we'll see VIX lose 16 and get down to something like 15.2, 14.8, this little zone that we arrived down to Monday before more selling happened, right? You could even draw a little trend line from these lows to yesterday's lows. So if we lose 16.5 and give out this trend line, then that's spelling more upside for the market today. So that's it for prep. Hopefully this was helpful for everybody. Oh, let's see. We'll take a look at like one of the contracts that we might have played yesterday. Let's take a look at, what was it, the SPY 308, 16, put, what was it, 442 yesterday, I think it was. We played a couple of times. We'll pull that up real quick. We'll put this on a 3-minute, darn it. There we go. So if you're new to predicted trades, this is your first time tuning into prep. This is just giving you an example of our beast system when loaded on an options chart, right? And in fact, sorry, I have a couple of beast tools, so let me remove one. There we go. So just taking a look at yesterday. The market went up first, right? So we are watching the puts. You know, the market ran up to the open range sell zone on ES. That's where we started watching puts. The 442 got down near beast, gave some bounces, held beast, and our trail line came down to meet the price action. This is when we finally take our position so that the trail line can become support and carry us up, right? Called out those 442s, I think even the 441s as well. 442s, we entered around 30 cents, and we rode those up to about 90 cents for a triple, and then left runners so that when it got up to $1.20, $1.30 for a 4x, we were locking more profit. Then we had that bounce on the market that got up to VWAP late in the day, and all that did was bring our 442 put from a sell zone back down to the buy zone that we loaded earlier in the day, where we could take another shot at 30 cents and ride that up to $2. And if you held past close, because you can still trade 15 minutes past close on SPY, made it up near 250 from 30 cents, right? Tapped our destination sell zone. So we provide this every day to our members. We provide one tool, our Beast tool, and it will work on your options, your futures, your equity, and even some internals. Basically, we put that tool on everything, and it gives us great levels to risk against. But we can't stress enough how strong these levels are on options charts. And we're basically the only service out there that provides key levels on options charts that work every single day. Key levels that are buy zones and sell zones, and we play against those every single day. When the market's topping out and looking like it's going to roll over, we can easily find a close targeted contract like the 442 put sitting at a buy zone. We take the shot and we make some great returns, doubles, triples, 4x, 5x, pretty much every day. So if you're new to Predicted Trades, definitely come check us out. There's a link in the description of this video where you can join our Discord server and start to test out the Beast yourself. Today is a free Thursday, so if you aren't yet a member to Predicted Trades, you can test out our tool. We'll be posting a free version that will work only on your options charts. Unlike how I showed you, it also works on futures and equity and whatnot, like we looked at earlier. So if you're new to Predicted Trades and you haven't signed up yet, definitely come test out our tool on your options charts and see the power that it can bring to your options trades. But that's it for prep today. Thank you everybody that tuned in. Hopefully you found this helpful. If you did, please give us a like and let me know in the Discord chat if you found this prep helpful. Let's see if we have any questions on YouTube. How do we get access to futures charts you showed earlier? Raj, basically you want to join our Discord server and then sign up for our service. I can say that I'll just load the chart back up real quick. We'll wrap up prep by looking at the futures on our Beast tool. But yes, basically this, and here I'll clear up the drawing, so we're just looking at Beast. There we go. So this Beast tool that works on our options, our futures, our equity, if I load up SPY, we'll be able to see these same levels. That's the tool that we provide every day in our server to our paid members. So you just have to join our server and sign up. And you'll be able to get these levels every day on your charts. I update the tool every day because the math that drives the tool changes on a daily basis. What does that mean? It means that if you aren't updating the tool every day, these levels will lose their accuracy. You'll start to find that we don't hold them as cleanly, we slip right through them, and we reverse in between key levels. Whereas if you're updating the tool every day as a member of our service, you'll see most reversals are right at our key levels. So that's it for prep. ES still looking strong, up near its sell zone. NQ already cleared its open range sell zone, so on any dips I'm looking for the open level to try to hold. You could even draw a trend line from the overnight from the lows. Come on, right around there. And when we get near open, that trend line will probably be right near this open level. This 14,940 is the overnight open level. So on any dips, looking for that to hold. Let's look at YM. YM a little bit different, a little bit of a mixed bag. YM got up to that open range sell zone and is already reversed back down to the buy zone, while NQ is still pushing. So we are seeing some slight rotation out of YM and rotation into NQ. Let's take a look at Ready and see if it's also still getting rotation in. So, something to keep an eye on. We've got YM dropping a little bit pre-market. We've got NQ and Ready trying to lead to the upside. And they usually do lead to the upside. So let's keep an eye on that. If we see YM and Ready have a pullback, we want to see YM get a little rotation into it. Otherwise, if YM is weak and starts selling and Ready and NQ start to lose this rotation in, then it'll kind of indicate that all indices are selling together and will likely come back down to retest those overnight lows. And I'm seeing another question. What service provide futures access? So, Raj, to answer your question, we have 3 subscription packages. We have Silver, which provides you SPY, QQQ, IWM, Apple, Microsoft, AMD, and I do include MES and MNQ, the micros, in the Silver tool. Then we have our Gold tool, which will have most of the futures like ES, NQ, Ready, YM, plus a few others. And the Gold tool has basically all tech names. Apple, AMD, Amazon, Google, Meta, Microsoft, NVIDIA, Netflix, Tesla, Shop. There's a bunch of names in Gold. Our Diamond access is basically the Beast tool will work on any ticker that you would like. So if you want to trade BA, CAT, MasterCard, Visa, Goldman Sachs, whatever, the Diamond package will get you every ticker that you want. So hopefully that answers all the questions that we have in here. I'm going to double check real quick in our Discord just to see if anybody's asked any questions over there. Nope. Looks like we're good. So thanks everybody for tuning into Prep. Going to wrap it up here and going to get those Beast tools posted for today. So thanks for tuning into Prep, and we'll see everybody in the chat.